Welcome back to Market on Close. Starbucks will report earnings after the close today and is expected to have adjusted EPS of 65 cents on revenue of $9.3 billion. Investors will be focused on guidance and what kind of impact a 50% tariff on Brazilian goods could have on the Seattle-based coffee giant. Now, with that said, it's time for Options Corner. We have to discuss Starbucks before their earnings. So Rick Ducat, I'll bring him in, our lead market technician, to talk about the chart and what he's seeing there for Starbucks today. Now, Rick, what are you seeing on Starbucks chart specifically as we head into earnings? Expectations seem to be a little bit low on this one.
Yeah, exactly. I mean, the street doesn't seem super optimistic about earnings for Starbucks here. The general themes that I kept seeing when I was looking at this are lower foot traffic, not an innovative menu, and just kind of to put it bluntly, their stuff's too expensive here. So if we were to look at our Starbucks chart here, we can see that this is a chart that keeps getting stuck in ranges repeatedly here. Our first range happened in March. It was that sideways period that gave us this gap to consider here, where we have our two red lines. So we can see that between 96 to 97, 50, 98 or so, that's a key area that price would want to work its way up if you were bullish in this name here. That's also our volume profile point of control, where the volume really starts to thin out. To the downside, our green line, 91 there, that could be a supportive area based on our recent lows here. But if you were to look at our next chart here, a 10-year weekly chart for Starbucks, you can see even though it's been a big range here for this one, it's kind of stuck range bound overall, 72 to the downside, 115 to the upside, making gradually higher lows, but really kind of just in the middle.
Yeah, and how is it stacking up against, the rest of the sector? I know it falls under discretionaries, which is a huge group, but, with its sector comparison and then the overall discretionary sector.
Right. So, okay, consumer discretionary in general outperforming the S&P 500. Starbucks doing a little bit better than that, but underperforming its more specific industry, which is hotels, restaurants, and leisure. So, and really not too terribly much. Starbucks is up 23%. The industry is up almost 26%. The reason I think this is important, though, is the other big thing I kept reading about Starbucks is competition, specifically Luckin Coffee. But to me, McDonald's really stands out. They discontinued that cosmic experiment here, but they're planning on rolling out a big lineup of iced drinks in September, vanilla cold brew, tropic refresher, etc. And, this is kind of the most discretionary of the discretionaries. If this sector starts to hurt, this is something where just kind of, I can't help but notice anecdotally, a large iced tea at McDonald's is like $1. Starbucks is like $5, $6, depending on where you are. Now, though, to look at this consumer discretionary sector as a whole here for a chart, we can see that rising wedge type shape here, trending upward, approaching further resistance near 232, our red line there, but in the thick of a volume node right now. Look for a break below 222 for further downside activity.
And as far as options activity is going, Rick, I might throw you here, but I just saw a headline come by off to the side here off camera saying Starbucks options surge led by $90 puts. What have you seen so far today?
The one that I saw was specifically the $85 puts. That was the biggest trade, September 19th, 85 puts, a 1.58 million debit opening trade, looking for 11% downside here. But the general range, if we were thinking about this August 15th area, we could look at our next chart here. The range, 85 to about 110 for this monthly expiration, is where the call activity mostly lines up here. You can see the green, the dark green area, 95. That is the highest open interest versus our general range, the expected move, 84.25 to 101.60 to be a little more exact there. But on the put side, if we go to our next chart here, it's a broader range, as is often the case for the puts. 100 to 70 is the general range here. The highest activity for open interest at that 85 level, though.
So the 85 level was the highest that you're seeing. Interesting, very interesting. And so that's for the August 15th expiration. Are we seeing anybody playing, the short play here into that August 1st, knowing that we've got earnings today and expiring at the end of the week?
It's difficult to tell. A lot of them are closing trades when you're getting near this area here. In general, I would say today's volume, though, on the call side, like roughly 90 to 110, put side 70 to 95, but actually fairly heavy all the way out until March here. Obviously, the most volumes at these near-term expirations, but pretty heavy activity going out a little farther than perhaps it would be typical oftentimes.
Oh, interesting. Well, thank you, Rick. We appreciate you breaking it down, comparing it to the broader sector, and also taking a look at the chart ahead of earnings.